Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 12th of January. I'm Daniel Lam, your host for the podcast. We had our first major macro release in 2026 last Friday. The December U.S. employment report was mixed. Non-farm payrolls rose by 50,000, missing estimates at 60,000, and slowing from a downwardly revised 56,000 in November. Job gains remain concentrated in social services and healthcare, while cyclical sectors contracted for a third consecutive month. But the unemployment rate unexpectedly fell to 4.4% from 4.5%, and wage growth ticked up to 3.8% year over year from 3.6%. So the broader picture remains one of resilience. There's no significant weakening in the US economy, and it is looking increasingly like a case of quote-unquote muddling through. The stock market has been very strong in 2026, is sending a very clear signal that bad news is good news, with the S&P 500 index testing the 7,000 level and the DXY finding support at 98 and hovering soon around 100. With investors comfortable about the near-term US macro outlook, it is now trickling down to the micro or the company level, and we do have the fourth quarter earnings season starting this week. The consensus expects US earnings growth for the fourth quarter at 8.9% year over year, a deceleration from 14.9% in Q3. So thereafter, we're expecting growth to reaccelerate to 14 to 18% over the 4 quarters of 2026. Corporate guidance on the 2026 outlook will be critical in driving further gains in US equities. So the focus of growth in 2026 is still on the technology sector at nearly 31% growth due to strong AI investment. We're expecting AI applications to drive growth in technology, particularly in semiconductors and software. We would like to balance that with defensive growth sectors. In healthcare, we're expecting innovative medicine to drive a 9.2% earnings growth in 2026, while valuation remains reasonable. And in utilities, with 9.4% earnings growth, boosted by electricity demand from data center build-out. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.